Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering the Form 15400 dealer report that taxpayers receive when a vehicle qualifies for one of the clean vehicle credits. We cover clean vehicle credits in detail in Spidell's Federal Tax Update, along with election year tax bills and proposals for a new presidential term, the latest IRC Section 174 research expense and research credit developments, and everything you need to be prepared for tax season. Visit Spidell.com for a list of topics and to register for this 8-hour webinar on January 9th and 10th. For taxpayers claiming either the clean vehicle credit or the previously owned clean vehicle credit, the vehicle dealer is required to provide the buyer with Form 15400 Clean Vehicle Seller's Report, but only if the vehicle qualifies for one of these two credits. Tax professionals can use the report as assurance that the vehicle qualifies for one of these two credits. If the vehicle does not qualify, the instructions to Form 15400 prohibit the dealer from filling out the form. If Form 15400 is required, then the dealer has to provide the buyer with the form at the time of purchase. The report is only prepared by the dealer if the vehicle qualifies for the credit, and it contains all the information necessary to prepare Form 8936, Clean Vehicle Credit, when the taxpayer files their income tax return. Form 8936 needs to be completed by the taxpayer even if they claim an advance credit at the dealership. In the case of advance credits, Form 8936 serves to compute any credit recapture for taxpayers whose AGI does not qualify them for the credit. Keep in mind that Form 15400 is provided for vehicle sales after December 31st, 2023. For clean vehicles sold before January 1st, 2024, the dealer's disclosures to a buyer were provided on a dealer's self-created report that should have contained the same information. Tax professionals should make their clients give them a copy of the dealer report because it assures the vehicle qualifies for the credit and they do not have to look up vehicle information. For the clean vehicle credit for a new vehicle, the only remaining hurdle is to make sure the taxpayer's AGI does not exceed the limitations: $300,000 for a married filing joint, $225,000 for a head of household, and $150,000 for all other taxpayers. For the previously owned clean vehicle credit, the tax professional will need to make sure that the taxpayer hasn't already claimed the credit for a vehicle purchased in the prior 3 years, and that the taxpayer meets the AGI limitations of $150,000 for married filing joint, $112,500 for head of household, and $75,000 for all other taxpayers. Form 15400 is not required for taxpayers who claim the qualified commercial clean vehicle credit. The IRS's requirement that only the purchaser listed on the dealer's report is entitled to claim the clean vehicle credit makes it all that much more important that the tax professional obtain a copy of the report from the client. This is especially true in situations where a family member may also be on title to help secure financing, where an unmarried couple jointly purchases the vehicle, or where a married couple purchases a clean vehicle and then files separate income tax returns. Remember that dependents cannot claim a clean vehicle credit, so taxpayers who purchase a qualifying clean vehicle with a dependent want to make sure that the taxpayer and not the dependent is listed as the buyer on the Form 15400. Spidell's Federal Tax Letter is a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that will impact your clients, from healthcare to trusts and from LLCs to virtual currencies. You can see subscription information and download a sample issue at Spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.